Hello and good morning. Thank you for joining us today. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities. Today's webinar features SolGold, which is exploring and developing for copper and gold projects in Ecuador's Andean Copper Belt. Its flagship project is the Cascabel project that covers an area of approximately 50 square kilometers. It is focused on the Alpala deposit there, which features a 2024 pre-feasibility study that demonstrates it would rank amongst the top 20 copper and gold mines globally. SolGold is also a large concession holder in Ecuador and is aggressively exploring the length and breadth of this highly prospective and gold-rich section of the Andean Copper Belt. Today I have with me on the webinar Scott Caldwell, who's the Chief Executive Officer, and Chris Stackhouse, who's the Chief Financial Officer at SolGold. The format of today's webinar will be comprised of two parts. In the first part, Scott and Chris will provide an introduction to SolGold and what investors have to look forward to in 2025. In the second part, we'll take your questions live. So please send us your questions using the chat and we'll get to as many as we can. To start, I'll handle the disclosures and then I'll get it turned over to Scott and Chris. For SolGold, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the SolGold corporate presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for SolGold specific disclosures. So with that out of the way, I'll turn it over to Scott and Chris to introduce you to the company and what you have to look forward to through this coming year.
This is Scott. Good morning, everyone, and thank you for spending part of your day with us. So sorry, good afternoon. I'm on Toronto time or Quito time to be more accurate. But at any rate, thank you for spending some time with us. And Chris and I will walk you through our corporate presentation, where we are, what we're working on. And then, as was mentioned, we'll open it to question and answers. So maybe we'll move on to the next slide. Cautionary language we just talked about. I guess the first thing is our shareholder register. If you look on the right-hand side, you can see as well as I that we have a couple of large strategics in the picture, BHP and Newmont. And if you go to the third one, we have Jiangxi Copper. And you can see where Nick, a director, and where Nick is a long-term and is founding father, I'll say, founder of the company. And Nick is still on the board and did a great job in the early years of the company. I own just under 1%, so you can see that I'm aligned, or I hope you think I'm aligned with all the shareholders. Next slide. So Ecuador, I won't belabor the point, but Cascabel is the north, the northern part of the country, and Porvenir to the south. And was mentioned early on, the company has a very impressive exploration portfolio that does go from Porvenir in the south all the way to Cascabel. We won't spend a lot of time talking about that today, but there's more information on our website. But it is a very exciting exploration portfolio. And I'm gonna hand this off to Chris, but before I give it to him, this is about the stream that we signed with Franco and Osisko Royalties. Both of them very good partners, and I consider this Franco's been in the story for quite some time, Osisko too. But this new investment or recent investment, which was midway through the July of last year, is an endorsement of the project. They're great partners. And we believe that you see Advance 1, 2, 3 over the next couple of years. We think that's enough money to get us through a final investment decision, or FID, so permitting, land access, right-of-ways, and a study that you could use to finance the project. So over the next couple of years, we'll get there, but we think it's plenty of money, and so we're financed for Cascabel only for the next 12 months or so. And Chris, maybe you could talk a little more about the stream.
Yeah, perfect. Thanks, Scott. So as Scott was saying, there's sort of two big components to this stream financing. One was sort of the short-term capital it provides. You can see that through the 3 draws that Scott referenced. And then there's this commitment for the 650 towards the construction capital. And obviously that the backers behind this financing are Franco-Nevada and Osisko Gold Royalties, split roughly 2/3, 1/3 as a syndicate. And so we're really excited to have their continued support, world-class mine finance partners. And sort of it obviously helps us in the short term, but also gives a lot of validation to the PFS that Taylor referenced that was issued in March of 2024. So this was all based on the back of that PFS. So validates the project and shows us sort of that this is a financeable project. Of course, with streams and royalties, there's always sort of the encumbrance that carries on the asset. So we were also worked with Franco and Cisco and came up with a structure that it's there for the full $750 million stream is committed, but on a change of control there is a 50% buyback option. So provides a lot of optionality for other partners that come in if they want to keep the capital or trade it out for other sources of capital. And then on the you can see the second bullet point there. We were really focused with them. The stream is just on the gold, and you can see the percentages there, starting for the first 10 years at 20%, and we get a credit. So you'll see there the effective is 16% on a net basis, and then that drops down to 12% of the gold thereafter for life of mine. And so in context, this is a copper mine, and 2/3 of the revenue come from copper. It's completely unencumbered. And then this represents sort of on a life of mine basis, about 15% of the gold has been sold. And that's where so it's 15% of the gold, it's one third of the project. So it doesn't hamper the economics. And you can see there, even with the stream applied, you take the pre-feasibility and add sort of this, or remove the gold credit, which takes the cash cost, the all-in sustaining cost, up to 95 cents per pound of copper equivalent delivered. So exceptionally low on the low quartile on the cash cost curve, and certainly there's a lot of leverage that can be applied to this asset still, and we'll see later on in sort of the financials what I mean by that. This asset, for the PFS economics, produces a generous amount of cash flow in the first 10 years at the PFS pricing about $7 billion. And this, as I said, provides the market and partners sort of a reference point of one, credibility for all the sort of due diligence that went down behind this transaction performed by Franco and Cisco, and a significant sum of capital that's available for this project to take it forward. And then sort of the overall economics, so 15% of the gold, $750 million, and you do all the math, and that runs at the time it was issued, sort of on the long-term consensus gold price. The cost of capital for this financing was circa 9%. So very attractive cost of capital, in our opinion, sort of given all sort of the options that would be available to a company at our stage, a pre-feasibility stage, for this size of capital. I think that's all I have on the Franco and Cisco.
Thanks, Chris. This, and Chris, maybe you can talk to this, but I'll talk briefly about it. Apollo, the deposit that's the cornerstone of this project, is very large and very, very high grade copper gold porphyry deposit. And it in the first 10 years of operation, so when we start to get into production there, it generates a little over $7 billion in free cash flow, after tax free cash flow. And so it just demonstrates the financeability of the project as we move forward with this. Again, I mentioned we have enough money to get the feasibility study done and the permits in place, et cetera. But to build it, obviously not. We're short. It's 1.55, call it 1.6 billion. And but that first 10 years, it really generates cash flow. So Chris can talk a little bit about it, but we think it'll support some debt and perhaps a concentrate takeoff. There's lots of ways to try and finance this project. But Chris, I don't know if you have any more comments on this slide.
No, I mean, the only other thing I think to note in here, and you'll see the production profile jumps in year 6 or 7 of there. So this cash flow profile does take into account in those early years the cash being consumed to expand and effectively double the production of the block cave and the process plant. So this cash profile is already net of sort of the doubling expansion that's going to occur in year 4 or 5. And this is what tells me sort of run that $7.1 billion over the first 10 years, free cash flow after expansion is what suggests to me this is a very financeable operation. And this is all done at the PFS pricing. So that would have been $385 copper and $1,750 gold as the long-term pricing. Obviously, those current spot prices are much higher than that today, and you can see sort of the upside cases there. So it references the dollar amounts.
One more thing, sorry, Chris, before you leave this slide. We extract in this plan, there is about 550 million tons of ore. The resource is close to 3 billion tons, so you can do the arithmetic. But I tell people I truly believe that this will be a generational mine. And how far, how long the mine life do you expand again? What do you do with it? That's a number of years down the track, but it is a generational resource, and that's why it's such an unusual deposit. Very high grade and a lot of tons, a lot of years of life. And I'll turn this over to Chris, but again, it's more of an indication of what kind of economics the project has. But Chris, I'll hand it off to you.
I mean, I can really sort of sum up this slide by the bottom right corner. There's a lot of leverage to the metal price. So going back to being in the low cost quartile on the cost curve, as you increase metal prices, there's just a lot of torque and leverage on this project. So you can see here sort of the PFS at 30% upside, so that way you can go back to the study and see the sensitivity analysis. And then even some of the metal prices today are higher than that 30%. We don't have the economics calculated up that high, but you'd see there lots of leverage to copper because that's completely unencumbered. Still significant leverage to the gold price, as 85% of it approximately has not been sold off, and this project has a lot of torque to metal.
This is a little more on the production profile, but when I was talking about, you look at that average grade for the first 10 years at 1.45% copper equivalent, and again, that $7 billion in free cash, it includes the capital cost to expand or to double the size of the process plant and to double the size of the block cave mine from 12 million to 24 million tons per annum. But again, it's just another way of looking at it, but it's a copper equivalent approach here on this slide. You can see the gold production, but it has some really good grades in the first 10 years, and then I'll say good grades for the rest of the mine life. Some metrics, if you like, or some comps. One of the things I like to show, and I won't belabor the numbers, but you can see Cascabel is at a pre-feasibility study is one of the largest deposit when we're looking at some other deposits. This is all public information. But if you look at the far right, that's our other resource at Porvenir, which is in the south of the country. So it would be very nearly in the top 10 or so. So again, a large resource with open potential there. It has not been drilled off. Again, so it's a lot of value, a lot of tons, a lot of good copper grades here. The largest and still a very pretty close to the end of this comp. More comps, and again, you can see on a price per pound and the price to NAV, we're trading way under the multiples of some of the others, and we are in a PFS stage, and but we think there's a lot of upside based on what others are showing, and again, they're in a similar state of affairs as far as where they are, like Solaris, etc. They're not producing gold or copper, so we think that there's a lot of upside in the story. And we hope you look at maybe this might be a good opportunity to make an investment in the company. So a lot of upside, whether you look at size of the deposit or if you look at these comps right here. The resource, again, I mentioned, again, I won't belabor the point, but we extract 540 million tons in this plan, and it's 18% of the M&I and 30% of the metal. 30% is the function of we're mining the high grade core out of this. It does not sterilize the ore next to it, or will not. So you're running the cave. We have a high column height. So really, the cave material, when we stop drawing it, it's still ore. It's above cutoff grade. So the dilution is minimal when you cave next to this. So as you expand this mine or continue this mine life, you're just undercutting an area right next to it, much like they do in some of the large block cave mines like Chuquicamata. There's various caves that are immediately adjacent. Some places they'll leave some lower grade material in situ, but we just stack right up against it. So we're not diluting any ore as we go through this mine plan. We're not sterilizing any ore, excuse me. Tam Tandy Americana resource, that's on the tenement. It's very near to the Apollo deposit, so a few kilometers away, but it's on the tenement. And what we like about this is it outcrops the surface. You can see the grades quite a bit lower, but we're working on the engineering work to see if Tam could be a way to get production sooner. An open pit mine, again, outcrops the surface, so it certainly looks like the strip ratio will be very low. Grade is much lower than Apollo. You can see it's 0.3 as opposed to 1.4% in the early years. But with no strip ratio, it may be a way, and we're doing met testing, we will begin met testing. And what we've, as well as other work like geotechnical work, et cetera, to see if this will work. I believe it will, but we need to do the engineering work and the metallurgy, et cetera, to see if it will. But it would be a way to really shorten our development horizon. Start with an open pit, or use it as an emergency, say an in situ stockpile. And if you had a problem with the cave, I'm not saying we will, but you would have this there. But essentially, this, because of the strip ratio outcropping the surface, this would be ready to go as fast as you could build your concentrator and your tail storage facility. So it could shorten the timeline of this production profile by a number of years. But we got to do the work, and we'll get that done in the upcoming months. But I'm excited about Tam. I think it might have a real place in our development schedule as we go through this. And obviously, if all the testing, et cetera, is positive as I expect, don't know until we do the work. But the mineralogy is identical to Apollo, low grade, but it's copper, gold, et cetera. And so we certainly believe it'll float and behave in the plant just like Apollo, but we got to do the test work. Porvenir, as I mentioned, is to the south. Again, you saw it on that comp slide. It's large. It's 400 billion tons, lower grade than Apollo, but 0.44 copper equivalent. So it's an exciting project. We haven't done much work on it recently, but it is it's open. It's got a lot of potential. So we'll stay tuned on that, and hopefully we get the opportunity to go down there and do some more drilling on that and see what it is. Next. So current activities, we're focusing on technical things required to de-risk the project. Geotechnical being what really is our current activities. Both we're working right now at site to finalize. I'm talking the Cascabel tenement, to finalize where we would the optimum location for the portal and potential plant site. So we're doing that work now, a combination of drilling and seismic work to make sure we know where we'd like to build it. We're going to confirm that with this work, and so we'll get that done. And then the definition drilling at Tandiama that I mentioned. When I say definition, we believe that there's some blanks in the drilling that we know about up high. And so again, targeting low strip ratio, early feed, possible feed for the mill. There's some gaps in the drilling. We've got a program design that was designed by a consultant we use by the name of Steve Garwin. And we intend to begin that program once the geotechnical drilling is done, and they're shallow holes, short holes. But if it can indeed prove up more ore up high, it makes it look that much better in the TAM. Excuse me. The goal is to get the ESIA, i.e. the impact statement, as well as all other permits and the proper and the required right-of-ways for pipelines and power lines and et cetera, and of course for the tails dam. So other opportunities, and I'll just talk briefly about is the couple of points, but There's still opportunity to look at the production profile. Is there a way to get more grade out of Apollo and or add Tam in, as you can see on there? And we're also looking at sublevel cave up high in the Apollo deposit, or will look at. There's good grade there, and you can get the sublevel cave running sooner as well. So we're looking at ways to shorten the development schedule, get production up sooner. But ultimately, the bulk of the tonnage is Apollo, and the bulk of this tonnage will be a block cave. It's I think most of us know, but once it's up and running, it's capital intensive. But when it's going, it's one of the lowest operating cost mining methods you could find. So if you'd like, your development's up front, and then it just it's very, very low cost to extract the ore. Gravity does all the work. So anyway, the study itself over the next 12 months or so, we'll be looking at capital operating. But as I said, really excited about where TAM could fit into our production profile. But we got to do the work. We got to do the engineering work. Next, thanks. The permitting schedule, and again, permitting is always a bit of it is out of our control, because we'll submit the required information to the relevant agencies and the Ecuadorian government I'm referring to. And this is our current schedule, and you can look at it. Essentially, we're saying towards the latter part of 2026, we'll have the permits. We'll hopefully have all the right-of-ways. We're confident we'll get that, whether that be surface rights at the mine or like I mentioned, pipeline, tail storage facility. And so this is what we're working towards, to have a fully permitted, I'll say shovel-ready project in the latter part of 2026. Again, permits are always a risk. The government itself in Ecuador, they really are saying the right things, very positive about responsible resource extraction, mining. Where Cascabel has, as we all know, copper's key to the decarbonization of the world. Copper connects everything. And so Ecuador, I believe, is looking at this as Cascabel and other copper projects as ways to transform their economy with renewable energy metals, copper in our case. And you're pretty excited. So we have support, and we'll continue to do that. We have a great support in the local community, and that's a credit to my predecessors, Nick Mather, ESG I'm referring to. So great community report, great support, great commitment from the communities to see this go through. And so it really has strong stakeholder support, and we're excited about working through this. But it's a couple of years of some hard work. Talk briefly about this. This is our sustainable approach to development. Again, various programs, and if you look on the far right, it's a 1 million tree program. We actually harvest indigenous or native plant species seeds from the rainforest, the forests around us. We then take the seeds, grow them into seedlings, and we're giving these away, distribute them to local communities, local farmers, etc., to use these indigenous plants or these native species for the reclamation work. So we're very, very committed, and we're going to be working on expanding our programs. We call it, getting ready for when we're generating cash flow, to where hopefully we get some really sustainable businesses there. We have a small coffee plantation, and where the local communities, we basically harvest the beans. They harvest them, we roast them, etc. And that looks like it's getting very, very close to being cash flow neutral. And the idea would be then the local community runs that business. But we're going to be expanding that with some other concepts as well. Again, ground up approach. Let's get the support in the local community, and we think it goes up and out from there. I talked briefly about this, and again, there's not a lot of discussion in here, but you can see the vast exploration portfolio from the Cascabel, which would be in the northern zone, down to Porvenir, which is number 11 at the bottom, the southern zone. So from Colombia border all the way down to the Peruvian border, some really high potential targets there. And we'll figure out a way to get working on that. Again, the funding that I talked about, Chris talked about earlier from the stream, is for Cascabel de-risking and development only. So, but there's some excellent targets here, and I happen to be a big fan of Blanca Nueve. But it's very close to Cascabel. It's about 10 kilometers, 8 kilometers north of Cascabel. And I think it's a real good target. They're all real good targets, but we don't have the time today to talk about it. And probably you need to talk with Steve Garwin about the potential there more so than me. But it's exciting, vast portfolio. Next steps, we awarded the current scope on the study I'm talking about to G Mining. And, we'll be moving into a feasibility study in the short order, and I'm sure G Mining will be involved in that in some way or another. G Mining, just for reference, a Canadian group, they're out of Montreal, but they were the engineering group, the construction group that designed and built Fruta del Norte. And, Ron and his team are doing such a great job at Fruta del Norte. It's a wonderful deposit. A real success story, and again, it was built and constructed and on time, on budget, and so everything just seemed to work. And G Mining was involved in that, but it's a wonderful deposit, and Ron's doing a great job on running that with his team. I mentioned the strategic opportunities for exploration. The ESIA and feasibility study, that's part of the de-risking, get all of that put together. You saw the permitting schedule, which will be the latter part of 26. The feasibility study will be early 26. I'm guessing 12 months or so to get that done. But it'll be definitely before the ESIA, and it would again be a study that would be in enough detail that you could start construction if you chose to do so, and or if you had all your permits and approvals. And Chris, maybe you can spend a couple of seconds about the last point, which is the financing options.
Yeah, perfect. So obviously we spoke already about the stream. And then as these other work initiatives advance over the course of this year, we'll start to be able to have more meaningful conversations with financing partners that would be typical for project finance for this type of project, and all the sort of avenues you would expect us to explore. So we need a little more definition in the project, so that comes through the feasibility study, and it drives sort of these other discussions on the project finance. So where would we be going to look for project finance? It's at all the typical places. That would be, senior debt to start with. Our concentrate, as I said, is unencumbered, so it's a as Scott was describing earlier, very clean concentrate, can go anywhere in the world, very marketable. So we think there's a lot of value in there. There's various government initiatives that are popping up around the world. So ECA, Export Credit Agency programs, critical mineral initiatives. So I don't think there's a shortage of options, and certainly it looks like the markets around the world are looking for big sources of strategic metals, copper being one of them. And so we're quite optimistic that we're going to have some meaningful conversations this year as these other technical initiatives advance. I think we'll turn it over to you, Taylor. We're going to pause there, leave this slide up for now.
So Taylor, the questions, please.
Perfect. Yeah, thank you very much, Scott and Chris. So now we'll turn to the Q&A portion of the webinar. Just a reminder to everybody on the line that you can type your questions into the chat box at any time. So that said, we do have quite a few that have come in. There were quite a few that were just asking about financing and considering additional development debt for Cascabel, but I think you just touched on that a bit. So that was helpful. I don't know if you had anything else to add on that front, but I'll just look for the next question here. Yeah, so with the regional assets, what's the strategy going forward with that? Are there plans to update resources there on TAN and Porvenir, and how else are you going to be moving those assets forward?
Well, I'll talk to that question, Scott, here. TAM, we have funding because it's on so yes, on TAM, we have the funding to do drilling because it's part of the stream, right? It's on the tenement and would fit into the the overall development plan of Cascabel. So we have funding from Franco and Cisco. So we have funding to do that. We've got the program design, we have the permits to get designed, and we intended to begin working on that in the near future. Shallow holes, up high ore. Porvenir, we do not have funding to work on it right now, and that's a different discussion, but it's got great potential. And again, as I mentioned, I happen to like Porvenir, but I like Blanca because it's so close to Cascabel, so we could operate out of the Cascabel camp. It's 8 kilometers away, so you don't have to have that infrastructure associated with a camp for your professionals to work out of, your workers to work from. So I like that. That is one of our great targets.
Perfect. Okay. We have a question here. Just wondering what the relationship is like with BHP and Newmont. Wondering if you, Scott, have spent a lot of time with them since joining the business, and what's their perspective on the investment, and are they supportive of management?
I've spent quite a bit of time talking, public information only, just like this presentation. They're significant shareholders, both BHP and Newmont, but they are shareholders, and so it's just public information only. Keep them informed when there's a development. I'll the presentation, if it changes, I'll give them a call. But what's the relationship like? When I first joined the company, both Newmont, and it was actually Newcrest at the time, and Newmont voted against me as a joining the management team, and now they've voted for me. So I would, they're voting for me, and so I would say they're supportive of management, the strategy. And they haven't increased their position, but they're holding their position right now, and they're supportive, I'll say.
Perfect. Okay. We have a question here, just wondering about kind of the political situation with the election, and what's going on with that. Maybe we could get your perspective from being in the country. And then the second part of that question, I guess, is related to the execution of the SEPA, which was due to be signed before the election, is what this person is saying, or it was expected to be. Is there an impact on that and risk of it not being signed?
Well, first on the political situation, our company has worked successfully as well as others under any administration. So we are, it's a democratic election. We will work with and support whoever wins. The first election is in February. If one of the candidates, and there's over 10 candidates that are running for president, if they don't receive a clear majority, I believe it's 40%, is the 40% of the popular vote, then there will be a runoff in April, and so you may not know until April. We would support whoever, and if you just, for backing up a little bit, Fruta del Norte and Mirador, the other large mine, it happens to be an open pit copper mine, and of course we all know about Lundin Gold's success story. Those were permitted, financed, and built under President Correa's administration. So again, sort of the left of center, the right of center administrations are supportive of the expanding the resource sector, mining I'm talking about, to responsible mining. And so I think we're going to get support there. I know we will.
Okay, excellent. Wondering, okay, let's see here. We've got a question here wondering about public consultation on Porvenir. That was scheduled for August last year. When do you expect an update from the government on this? And are you still engaged with the local community? And is there any feedback at this point?
The public consultation on Porvenir has been finished, and we anticipate receipt of the final approval, which would be the advanced exploration, the permit required for advanced exploration, which would move Porvenir into the same exploration phase, if you'd like, as Cascabel, which would allow us to do significant drilling, etc. continue to explore the deposit. We expect to get that in short order.
Okay, and then on the there's a few questions just wondering around the same topic of whether you're prepared to or planning to take the project all the way to production if need be, or if an exit is the way to go.
We are right now focused on de-risking the project, and the idea would be to have the financing plan, and therefore then you could get the other resources associated with it. But if we had to, we could take it through. When I say had to, if we chose to do so, we could take it through production. And but we're always interested in speaking with potential partners, strategic partners, to help us move this along. But it has to be the right partner, and the right means a strong balance sheet and the right technical aspects, etc. But right now, we're gonna go as we have the financing in place, and we have our consultants in place. I'm talking G Mining and others that will carry it through FID, final investment decision, permits right away. So yeah, we're heading down the path of we'll build it.
Okay, and then we have a question here wondering, once everything's in place, fully permitted, etc., how long would the construction period be before it could get into production?
Yeah, and you could have seen it on those earlier slides, but after we have all the permit, when you start construction, it's 4 years of development, and that the lead item there, the critical path, is the underground development for the block cave. Hence the strategy of looking at the Tam open pit, the sublevel cave. Can we get it in production faster? And it would shorten then your production schedule. You could build the tail storage facility in a couple of years. You could have a concentrator built, so you go from 4 to 2. So that's why we're intrigued about the possibility that Tam gives us, and a possible sublevel cave. Although admittedly a sublevel cave, trying to get 12 million tons a year out of it would be tough, but it's very good grade. So it's a kind of a trade-off where you'd go first. So the idea would be to try to shorten that development schedule as much as we can. But we, again, as I mentioned before, we have to do the technical work, met testing, etc., pit geotechnical. So work in progress.
Okay. Question here, given the current global geopolitical tensions around commodities, are there certain countries from which you would not accept construction financing, i.e. China?
As we would look at any logical investment, and it would be, there's no particular list. I'm sure we would consider some countries as a no-fly zone, and they might be at war or whatever. So, but anyone that is on our register now, we would consider if they had a good proposal, whether that be an individual shareholder or a strategic, and you can look at the list. And so, but it has to be the right terms, and it absolutely we consider financing from many sources.
Great. Okay. Another question here, wondering about the MOU that was signed for the creation of a hydroelectric and solar plant. Given the recent issues in Ecuador associated with electricity and due to lack of rain, is the focus primarily solar or hydro?
We're looking at a combination of solar and hydro. The solar, of course, wouldn't have batteries, so it would only work in the daytime. So it's kind of a blend. The hydro that's being looked at is a run-of-river ponding, they call it. So it's a series of 4 small dams. There's no reservoir. The reservoir is essentially, it goes to high water, right? So in other words, there's no displacement of communities. It's environmentally sensitive. So there's no big dam and that relocation. But yes, a drought could affect. Now we have the people we're talking to that we signed the MOU with. They have 40 years of hydrological data on the river that this facility would be placed on. And so it looks pretty solid. There hasn't been a problem where this wouldn't work over that 40-year horizon, but that's looking back, not forward. And so we're looking at that, and with solar, and we're pretty comfortable. I want to stress that we're not going to run into issues. We are not going to own and operate it. We would be a partner, a minority. When I say that, we have very, very minimal investment. but we would get a slightly reduced power rate than if we hooked to the grid only. But what we would provide as part of Chris's financing package is a long-term power takeoff, right? In other words, we're going to be in operation for 28 years. And so it's a reliable consumer of the source. So we're excited about that. But again, we wouldn't own and operate it. And that's part of the feasibility study as we move forward, is to look at that potential. And there's some other ideas as well. But we think that by hooking to the grid and having our own hydroelectric system with some complementary solar, we think we've got a solution that would work, certainly based upon past historic data and even what we're seeing today on the river. So we continue to gather that hydrological data. So we think it'll work very well.
Okay, great. And kind of a related question to this here. Just wondering if your current permits on the Mira River apply to the hydro approach, or would further permits be required?
The permits on the Mira River would require, or any river would require, further permits. And again, we would be we're not going to own or operate or permit it, right? And so in other words, they would finance it, they would own it. We would get a reduced rate because we would commit to a long-term agreement, but we would not be the operator of this. So the people that we've signed the MOU with, they've been working on these projects. I mean, that's what they do, is design and build lots of things, but design and build hydroelectric, and solar. And so again, we would be a customer, but not a big investor in the infrastructure, nor would we permit it.
Right. Okay. We've had quite a few questions just asking about de-risking Cascabel. Is there any that you see as pivotal to unblocking significant further investment in the project, or anything you would point to in specific for that, or is it the whole chain of progression?
Well, we think, my personal opinion is it's the whole chain. If one link doesn't happen, the whole schedule gets delayed. We have a very robust plan. We've got a good team working on all aspects, from right-of-ways to land purchases to the permits themselves and the technical work. So I think it's just the whole chain. We can talk all day long about what's more risky on the permitting side. And that's probably, if I had to pick something, we have strong support. We have to provide, it's a very rigorous system in Ecuador. So you have to provide the data, baseline, whether that be flora and fauna or water or whatever it is you want to talk about. You have to provide all that data. You have to use suitable consultants so you get independent views. So it's the whole chain. And so any item, you can't say what's critical path and what's not, or what's more required than the other one. If we don't get our permit for the pipeline to the tails facility, well, then it's the pipeline. But we don't see any fatal flaws. We'll work through it, and then ultimately you get the ISA.
Okay, excellent. Question here, wondering, in your view, what are the key near-term drivers for the stock price?
Well, with I think the key near-term drivers, I might ask Chris to put on this, is I think it's de-risking the project. But in the near term, I'm kind of excited about what this TAM drill program is going to show us. Again, if we can infill this blank area up high, that we believe there's a high probability that we'll have some success there, that could really impact the overall economic viability of TAM. So that would be the near-term driver. We have funding to do it. We have the permits to do it. We've got the infrastructure to do it. So that would be it. I don't think too many people would be too excited about, wow, we found a great place to build the mill site, but that's important to the overall schedule. So that's kind of exciting as well. And I'm an engineer, but it's kind of exciting. And I don't know, Chris, you might maybe some financing stuff. I don't know.
Yeah, well, I think just in general, sort of as we tick the boxes, so project definition is just going to increase steadily as G mining advances over the coming months. That then will inform sort of the next 12 months of what the study is going to look like, and more refined. Our estimate right now is around 12 months to complete a feasibility, but that'll get a little bit more resolution on that. Permits, so that, as the project definition increases over the coming months, permits can be submitted. We expect the IPAs to be signed in due course. So there's there's no specific time for any of these other than sort of as we're talking about in the next quarter and over the next sort of 12 months. Those types of things will happen. If we find, and then I think the other sort of catalyst, again, no specific timeline on it, but it's in the work streams, is finding a path to unlock shareholder value for the regional portfolio that we talked about, because there's just so much, there's tremendous opportunity there. We currently don't have funding for it, but if we can find a partner or find a solution for that, we think there's a lot more sort of value add that we can sort of demonstrate with the drill bit.
Yeah, I'll echo that. That outside exploration portfolio is very exciting, and like Chris said, with the drill bit, and so figured out how to get some work done on that, and we have permits to work on a number of the projects, so you could get started very, very quickly once you have a solution to the funding side.
Perfect. Okay. See if there's any other questions that have come in here. Maybe just a question here asking about G Mining. How is the relationship with them and their ability to deliver what's required on this big project?
Yeah, well, we're working on a study now, right? So we're just getting ready to award the various components for the feasibility study, and that's required for final investment decision, or FID. They're great experience in Ecuador. They believe, like we believe, in a salt and pepper approach. By that I mean our professionals, whether that be an environmentalist or a geotechnical person, they would integrate into the system, into the project team. And so it's one team, not G Mining and us, but obviously their Ecuadorian experience is extremely valuable. They know the regulations, whether that be labor or mining safety stuff that are unusual. Each nation has slightly different regs, so they know all that. They know the customs, and when I'm talking about how to import goods, because most of the goods for this project, obviously, we'll buy as much as we can locally, but you're not going to buy a SAG mill made in Ecuador. You're going to have to import it. And a lot of the other, of course, the skill sets, when I talk labor. And so it's I think they're a great fit, and I think that they do have the bandwidth. They've got a great track record. If you look at the projects they've been involved with, probably the most relevant to us, of course, is Fruta del Norte, which is Lundin Gold, and we all know what a success that is. And so I'm really excited about working with the G Mining group, I think it's a really good fit for us. Obviously, no group, I don't care who you're talking about on the engineering side, has all of the expertise. Block cave is a very specialized situation, so G Mining will add resources in the right areas. They've got a great network, so I think they're the right choice. I'm excited about working with them on a go-forward basis. Chris, you know them, and very strong, I think. Anyway.
Our relationship with them, excellent. We're working together, and their market reputation, I think they're one of the best groups on the street right now.
So very, very happy with the decision to proceed with G Mining.
Perfect. Okay. Maybe one of the last questions here. I think we're kind of getting some repeats coming in here, but just wondering about if maybe you can pull up that top shareholders chart again. There's been a few questions. Just maybe you can just talk about your shareholders and percent retail of the holdings in the company, just so that it can be clear for all the viewers here.
Sure, we're working our way back to that slide. Apologize. Well, we'll just start from the top. BHP, Newmont, which was the Newmont, of course, acquired Newcrest, so that was the Newcrest investment, but they're both at 10% of, then this would be percent of shares, so 10% of the company. DGR is of course, that's their associated, Nick Mather's involved in them a little bit, or quite a bit, and they have 7%. Jiangxi Copper, somebody asked, do we have was there a question about what groups wouldn't you work with? And I think they mentioned Chinese in the question. Well, obviously Jiangxi Copper supportive shareholder, as is Newmont, as is BHP. SolGold Canada owned shares. Chris, those were the shares that were acquired when SolGold acquired Cornerstone. Cornerstone owned 5% of the company. So owned shares meaning that we held those shares. We didn't retire them. We didn't sell them. So so we own 5% of ourselves. How's that? So, Maxit, they own 5%, and Maxit Capital is an investment advisory group out of Toronto, Canada. 10 Stars, a group out of, I believe, Singapore, 4%. And of course, Nick Mather, the founder of the company, 3%. Norges Bank, the Norwegian sovereign wealth fund, resource side, 3%. And I own just under 1%, that rounds up to 1%. So, if you can do the arithmetic there, but 50% of the outstanding shares is held by 10 shareholders, right? And so it's a closely held stock, and I would say the rest would be retail. Some of them rather large positions. Some of them, like similar to mine. Rather large, similar to my positions. If that's small or large, I don't know. On my background, I've been into the SolGold story since 2016, and I'm obviously a big believer of the project. Always have been. I love the Cascabel discovery, and so I've been a long-term shareholder. But so over 50% of the stock held by that small list, and the rest I'll say was retail, but some of it's rather large retail, i.e. below 1%. Some of it's institutions that have a small shareholding relative to the list on this. So retail and some institutions have that last 51.
Okay, perfect. Scott and Chris, I don't know if you've been trying to keep up with the chat flow coming in, and if there's any questions that you want to address, if you have been that I may not have asked, I'm happy to let you jump in. Or, but if not, then I think we can probably wrap up the webinar. Give you a minute here to
just to look at it,
filter through.
You should look at that.
Yeah, Taylor, I'm just scrolling through it now. I think we've sort of spoken to most of these. Of course, if there's a question that we haven't answered and shareholders want to follow up with us,
all you have to do is send us a note. We'll try and answer it. I think we've kind of, as we, there's a question about de-risking. We think, you saw the schedule there, we think it'll be ready in a couple of years.
Yeah, I think that's it. I just scrolled to the top.
Yeah, I think we've answered them all, but certainly we're available if we missed something or somebody thinks of a new question. They just need to let us know, and we'll try to answer it if we can. Again, we only speak to public information. We can't speculate on, things that aren't public, right? But there is forward-looking statements here, but it's all public.
Yep, for sure. So perfect. All right, we will wrap it up there. So I would like to thank Scott and Chris from SolGold for taking the time today to host the webinar with Red Cloud Securities, and thank you to everybody on the line for tuning in with us.